Ever wondered what central bank digital currencies or CBDCs are all about and why they're gaining so much attention globally? Let's dive right in. Imagine a world where your money is not just a piece of paper or a coin, but a digital entity issued and regulated by your country's central bank. That's what a CBDC is, a digital representation of a nation's traditional fiat currency. They're designed to function exactly like the money we're familiar with, but with the added benefits of digital technology. This means faster transactions, enhanced security, and potentially greater financial inclusion. So why all the buzz? Well, as we move towards a more digitized society, CBDCs are seen as the next big step in the evolution of money. They hold the promise of reshaping our financial systems and the way we transact daily. So, CBDCs are essentially digital versions of traditional fiat currencies, but with the potential to revolutionize the way we transact. CBDCs aren't as new as you might think. Several countries have been experimenting with them for a few years now, starting from the Bahamas with the sand dollar in late 2019, to China's digital yuan in 2020, and Sweden's e-krona. The timeline of CBDC development and adoption is a testament to the world's shift towards digitalization. The Bahamas was the first to fully launch a CBDC, aiming to enhance financial inclusion and resilience. China followed suit, with the digital yuan already in pilot phases in several cities. Sweden too has been testing the e-krona, aiming to maintain monetary sovereignty in an increasingly cashless society. But it's not just these countries. Many others around the globe, from the United States to South Korea, are exploring the potential benefits of CBDCs, albeit at different stages of development. Some are in the research phase, others are conducting pilot projects, and a few are already rolling out their digital currencies to the public. Yet, the journey towards CBDC adoption hasn't been a bed of roses. These countries have faced and are still facing several challenges. The biggest of these is the balancing act between digital innovation and regulation. Too much regulation can stifle innovation, but too little can lead to a wild west of digital currencies, which could destabilize economies. Other major challenges include ensuring data privacy and security, avoiding digital exclusion, and addressing concerns about monetary policy implications. For instance, if everyone switches to CBDCs and banks lose deposits, it could disrupt traditional lending activities. Despite these hurdles, the progress made by these pioneering countries provides valuable lessons for others. They show that while the road to CBDC adoption may be fraught with challenges, it's not insurmountable. These countries are pioneering the CBDC journey, setting the stage for others to follow. Their successes and failures will shape the future of CBDCs and, by extension, the future of money itself. As we continue to watch this space, one thing is clear: the era of digital currencies is just getting started. The potential of CBDCs extends far beyond just digitalizing money. They could fundamentally change the way we conduct financial transactions. For everyday people, the benefits of CBDCs could be game-changing. Imagine making payments that are faster and cheaper, with the added bonus of financial inclusion for those traditionally left out of the banking system. Let's not forget the prospect of programmable money for smart contracts. This could bring about a level of automation and efficiency previously unheard of in financial transactions. And it's not just retail that stands to gain. In the realm of wholesale financial services, the impact of CBDCs could be equally transformative. Think streamlined interbank transactions, reduced settlement times, and enhanced transparency. These are just some of the ways CBDCs could revolutionize the financial landscape. If well executed, CBDCs could bring about faster, cheaper, and more transparent financial transactions. The future of finance could very well be digital, and CBDCs might just be the key to unlocking this future. While CBDCs hold immense promise, their success will hinge on overcoming significant challenges. In this journey, we've explored what central bank digital currencies are. We've seen that they represent a digital form of a nation's currency, issued and regulated by its central bank. We've followed their development and adoption timeline, witnessing the pioneering efforts of countries like China, Sweden, and the Bahamas. We've also delved into the potential of CBDCs, their possible use cases in retail and wholesale financial services, and the tangible benefits they could bring. However, we've also acknowledged the hurdles they face, such as data privacy and security concerns, and the risk of digital exclusion. To overcome these, a concerted effort from policymakers, central banks, technology, and finance experts is required. CBDCs are on the horizon and they could revolutionize the world of finance as we know it. So keep an eye on this space for more updates.